Shane, how's it going?
Kyle, I'm here, man. I'm busy, but I'm here and excited to chat with you today. So hopefully you're doing well too.
Doing well. Perplexed by the market a bit, or I guess not. For once, it makes sense. So I think it's starting to align. Last week we were kind of on the drawing line or the dividing line between bulls and bears, but now it's just volatile, ugly, and kind of falling under that line. But we'll see. So for
I think the
anyone,
market's been down like 7 of the last 9 days or something like that. So I've been heavily short the Qs and made a bunch of money on that so far. And that's worked out. I'm starting to cover the position though, because maybe we'll get a little bounce here before we ultimately head a little lower, is what I'm kind of thinking. Maybe some consolidation before the bottom drops out again, but I'm still pretty bearish and positioned as such, and feels good to be making money on the short side.
nice. So, well, for anyone tuning in, today is March 2nd, and we'll walk through some charts and hopefully give people some ideas of what's going on out there. So, with that, I'll flip it over to the charts. All right, Shane. So, let's start with the SPY as usual. Last week, I was kind of telling everyone if we could hold this level, so, it's right around 400. Uh, I thought, oh, flipped over the wrong one. So if we were to hold that level right around 400, to me, that was a sign that, hey, maybe we should be bullish, even though it makes no fundamental sense. And you're seeing it right now. It's just been consolidating. It's been going down, as you mentioned, but it's been a very choppy down, which you can see that in a market like this. It's not just going to fall off a cliff right away. But I think once you start getting under this 39 or 390 level, you could see some of those big sell days. And, we'll see. I think we were getting just a tiny little bounce going into this call, but to me, it's just not looking great. And yeah, what are your thoughts?
I mean, gosh, I'm seeing a whole bunch of down days. Maybe I underestimated it a little bit. I got a cool little stamp tool here. I'll see if it works. But there's a down day. That's a down day, even though it's a green candle. Oh, and they're disappearing. So we had one, two, three, four, five red candles, six, seven, eight out of about 10. So yeah, I like it. Lots of downside from there. And we have now broken below the purple trend line here. So that's pretty bearish. And I guess we're seeing momentum kind of stall and maybe start to put in a little bit of a base there. So looks like we opened this morning before this morning we opened below the 200-day moving average and have rallied back above it a little bit. And I guess no surprise to see a little bit of action around the 200-day moving average. But the way if I were looking at just the MACD, the momentum at the bottom and the 200-day moving average, I would say probably probably see a little bounce here. Hold the 200-day moving average while the MACD tries to go green, and then I don't expect it to go much higher. But it wouldn't surprise me to kind of go sideways, bounce between here and say 400 for a few days until the MACD turns green, and then ultimately, we've dropped back low. That's kind of my game plan. That's what I'm looking for. I don't know, of course, whether or not that will happen, but if I had to guess, that's what I would guess would happen, and that's what I hope will happen. So that way, the technicals and the fundamentals are once again in alignment. Not because I like to see people lose money, not because I want to see the market go down. I'd rather see the market go up, and I'd rather see us have a strong fundamental economy and a strong dollar and a strong country. But unfortunately, I just I don't see it that way right now. So we trade the market we have, not the market we want, and our job is to tell people what we would want to know if roles were reversed. And I think what I would want to know now is that, yeah, the market may have bounced since, the beginning of the year, but it hasn't bounced that much. I mean, we're only up, what is that, about 3% maybe year to date now? What is that? Is that, yeah, about 3.4% year to date. So pretty flat. And I think we're going a lot lower. think GDP will slow. Think inflation's going to stay high. Think the Fed might actually pivot to hiking by 50 basis points instead of pivot to cutting rates. So all that to me just still sounds super bearish, and doesn't mean the market can't bounce a little bit here, but I think we're heading lower.
Yeah. And I think same as you, this is an obvious level where I think you see either consolidation and break. You could see a little pop and break, or, I think the big thing is a lot of times it'll just take a catalyst. So tomorrow you have ISM numbers. I don't know if that's going to do it, but next Friday is the jobs report. Maybe that's it. But that's usually what it takes to get those big moves is just some sort of a catalyst. Doesn't really matter if that report's positive, negative. The market will kind of, make the chart kind of fulfill the prophecy, so to speak, or the move. So
But it wouldn't surprise me to not even need a big move. I mean, it could just grind lower on
yeah,
constantly bad data continuing to come out. So um, I don't think it has to happen all at once. I get suspect when things like that happen too quickly. I think it should be a slow grind lower and just demoralizing to the bulls who just think, oh, the market's got to go up. It's a new year. It was down last year, so we got to bounce now. Um, no, it doesn't. Market can go down a lot more. And what do we get? We got CPI coming out Tuesday of next week. No, the following Tuesday. So we got about 2 weeks before the CPI data comes out too. So we'll see. Looks like we're projecting about 6.2% on CPI year over year. Last month was 6.4, I think. So still ridiculously high. Things are still ridiculously expensive, and
yep,
people are hurting. So
yeah. And then, so, turning to the NASDAQ, it's really the same chart. The difference being NASDAQ gets hit a little harder with rates. And once again, here you are, 200-day. Just below it, it kind of popped back up to it. But yeah, Shane, I kind of agree with you that I think the worst trade is a grind lower. I think that's the one that will just wear everybody out and makes it really challenging. But, we'll see. But on
yeah,
this one
grind
too,
just grind lower into that final capitulation move.
yeah,
And then we can get it all out of the way and start climbing again. I mean, that's why I want the market to go down the most, is because I want to buy stocks for our clients and myself at way cheaper prices that make a ton of sense from a valuation standpoint. Like I want to load up on stocks at really good prices and then hold them for as long as possible. So I'm not a perma bear. I see what's out there right now, and I mean, I don't need to spin a bullish story all the time. We'll be able to buy the bull market on dips for the rest of our life once it finally turns into a bull market, but I just don't think we're there yet.
I agree. And then here is the chart. To me, I think this sends the biggest message to the market. This is the 10-year yield, and you can see it's going right up into the Elevate logo. Doesn't appear to be slowing down, and having it up here over 4% does nobody any favors, especially the equity markets.
Yeah, we looked at that last week when it was just barely breaking out here, and so it has continued to break out and looks like it wants to make a run to the 4.3% recent high. And so I mean if the 10-year yield breaks out above 4.33, the QQQ should go to its recent low. I mean, that's how it should work. Um, or lower, right? Because if the 10-year doesn't stop there and just keeps ripping, the Nasdaq should make a new low. And I kind of think the 10-year is gonna go up. I think it's gonna put in a new high, and I think that spells kind of trouble for a lot of profitless growth stocks out there. Um,
Yep.
So we'll see what happens, but it doesn't look pretty. And we have a couple more charts to kind of outline that. I think the next one, what do we got? What's the next one?
So the next one here, yeah. So again, just
Yeah.
10-year, and same thing. It's
Yeah.
it's not looking good. That's for
It's
sure.
a, yeah, so the blue line here is the 10-year yield, the chart we just looked at, and it's heading back towards, 4 point whatever I said, 4.33. And meanwhile, you see the Nasdaq dropping while so this is the 10-year yield going up, and this is the Nasdaq dropping in concert. And
Hmm.
so I would expect that to continue. And if the 10-year yield continues to run, The Nasdaq's going to continue to fall. The Nasdaq's got a recent low down here, and 10-year's got a recent high up here. So when 10-year gets there, Nasdaq should be back down here. So that's a lot longer to fall.
Yeah,
So we'll see what happens. Again, we don't have a crystal ball, but and it won't go in a straight line. Consolidation and then move, and then consolidate and then move, and consolidate and then move. That's kind of how markets work. So, but these are inversely related. So the higher the 10-year goes, the harder it is for companies in the Nasdaq to make money, and that is reality. There's nothing anybody can do about it. Those things are connected.
yep. So it's not looking good there. And then the other thing that's connected is when you have a rising rate environment, that tends to help the dollar. It just makes the dollar a better investment for outside currencies. And we're seeing that. The downside of that is stocks tend to underperform when the dollar is strong. So right back at it. Looks like we're going to consolidate here and then make that push higher.
Yeah, technical analysis is cool, man. You got a low there coinciding with all these lows and reaction there, and then you got this low hitting this low. I mean, it seems like people make fun of technical analysis sometimes and say, "Oh yeah, if you draw enough lines on a chart, some of them are bound to match up." Again, it's not perfect. It doesn't work every time. They're mostly areas. Doesn't have to react exactly at this line right here, right? It's just in the area, in the vicinity.
Hmm.
And so, I don't know. It's just the way that it works. I mean, these charts are how humans are actually behaving and trading in the markets, and people all have their prices. So it's no surprise that you get reactions at certain levels. Um, but it's never foolproof. So you do have to pay a little bit of attention. And as we like to say, control your risk, right?
Yeah.
Take your chances and place your bets, but control the risk is the primary thing. You want to make a lot of money when you're right. You want to lose a little bit when you're wrong. And that takes care of not being able to win 100% of the time. Um, so yeah, the higher the dollar goes, that should coincide with a higher rate and a lower Nasdaq. Really a
That is
lower
true.
everything, which is what the Fed's trying to do, is bring prices down across the economy. So higher dollar, strong country. I'm all for it. It's going to represent short-term pain for the markets.
Yep. And one thing that I'm not quite certain of how it's all going to play through is oil. So we're seeing this consolidation. It's been playing out since December. And it really, depending on how today closes, I guess, to me, it looks like it's just coiling and getting ready to go higher from here. How high, I'm not sure, but it's certainly established a base and you've got, higher low, higher low, higher low. So looks like it's taking us higher.
Yeah, that's a really, I mean, that's a really pretty pattern. It's just tightening up, right? It's tightening up. Who knows which way it's going to break? Going to break up or going to break down? I mean, I don't know. As much as I would love to see it break higher, I kind of think it's going to break down. I don't know how low it can go. Again, with the Fed, or not the Fed, but the White House saying they're going to buy oil to replace the strategic reserves at below 70. If it does drop below 70, I think there's a massive buyer there. Of course, they have to print a bunch of money probably to buy that oil, which is inflationary. So I don't know how good that is, but anyway, I don't know. I kind of lean towards it maybe breaking down. I do see that the MACD is ticked higher, but even the MACD is consolidating, man. I mean, that's getting tighter and tighter too. So I think oil's poised for a pretty big move one way or the other. And don't be surprised if it fakes you out and goes one way and you're like, oh, it's breaking out. And then the next couple of days or weeks, it it traps you. It'll trap the bulls, right? It'd be a bull trap if it broke out first and then ultimately reversed too much lower, and vice versa on the other side. So wouldn't surprise me to see a little fake out move. But I don't know. I don't trade oil, but if I had to bet right here, I'd say 2 weeks from now, oil's lower. I don't know why. I kind of that's what I see. What do you think?
I kind of agree with you, and it has almost nothing to do with technical analysis on this one, and more to do with everyone out there still is just talking about 90 and $100 oil. And when everybody has a view that's on one side, a lot of times you'll see it go the other way. So
Gotcha. Yeah.
that's kind of where I'm at there. I see reasons fundamentally why oil should be strong, and I look at this and it looks decently good, but I mean, it was back here, last year, 2022, everybody saw this pattern. We kept thinking it was going to break out. Never did. Here we are, almost a year later, we're lower, and wouldn't surprise me one bit if, to everyone's dismay, it went lower again. And I mean the traders here. Obviously, people love paying less for gas. So,
Yeah, right. We'll see.
yep. And then, so Bitcoin, that's been all the rage lately. Oh, switch back over. It's looking pretty bullish to me. I mean, you
Yeah.
came up, it's consolidating, it's got to, catch up to itself a bit, but if I had to bet, I'd bet long, even though it goes against every fundamental factor I see right now. But
Yeah. I mean, it's up 42% off the lows around 16,000 recently. So, I mean, it's already made quite a move. Um, to go from here to that orange line above, right through our logo, is another 23% higher. And that's a pretty major level that goes all the way back to January of 2021, really. I mean, so that's like not pre-COVID, but that's a ways back there, put it that way.
mhm,
And so the price of Bitcoin has reacted off of that several times since then. And it's been support each of those times. Like, so now it's resistance. And we'll have to get through that before we make a meaningful move higher. Um, but yeah, I think I think Bitcoin is a good long-term play. I'm still picking some up here and there, very small amounts. I have very, very little capital allocated to Bitcoin right now, and I don't own any other cryptos. I may never trade any other cryptos again. But I think Bitcoin has a real use case, and we'll see what happens with you know, the the federal government and defaulting and all these kinds of things. I mean, Bitcoin doesn't have that problem, and so we see
mhm.
all these debates in Congress now about raising the debt ceiling and making our payments and a whole bunch of political brinksmanship, which Bitcoin just doesn't have that issue. There's nobody who's messing with it that way. So I think for a lot of reasons, it would be great to have a global, non-political standard of value, just like we have a global, non-political standard of measurement, for length, which is generally the kilometer, or the metric system. Um, It'd be nice to have that. We have a global non-political system of measuring temperature, which is I think mostly Celsius across the globe. Us people in the United States are a little weird about that, but um, it's not political. Like, what's the temperature outside isn't a political thing, and the price of things is very political, right? Because it's priced in dollars, and the United States controls the printing press. So I mean, we could definitely have a whole chat on the implications of all of that. But I like the idea of Bitcoin long term, and we'll see if it has its moment in the sun as the government argues about whether or not to pay its bills and all those kinds of things. I think it'd be a good thing for Bitcoin to get some backing in that arena and stage a move materially higher. So we'll see. But I'm nibbling.
I agree. I mean, I like it here. If I was going to trade this, that low, is it right around 23,000? So just off the last few days. And then today you have just this minor pullback. The risk reward on that looks pretty good. So,
Yeah. Yep.
yeah, nice looking chart. And then here is our ugly chart that just makes you want to go hide under a rock. This is the, you know, 10 minus 2, and it's more negative than it's been. Best recession indicator out there. And I have no positive things to say about this. Just
No,
does not look good.
it can't even bounce. It's just dropping, man. I mean, every move is sold essentially, and so the spread's getting wider and wider, which sort of leads me to believe the recession we're heading into is going to be deeper and deeper, and longer lasting. I don't know. There's not much to say about it other than this is a very accurate, historically speaking, indicator of a future recession, and a future recession or a recession itself tends to see stock prices drop by an average of about 21% from peak to trough. So we could easily see a 20% drop in stocks from where we are today. based on heading into a recession probably middle of this year. So we'll see if the good old boys in the government get their friends at the NBER to not call it a recession, even though it's a recession again. But I think economically speaking, that's what we're looking at. So save your pennies.
Yep. And if you're saving those pennies to buy a house, hopefully you don't have to borrow a whole lot. This
Yep.
is definitely not looking so good. 30 years at 6.65%, 15 years at 5.89. And, we just go back to technical analysis and it looks like this kind of flag going on over there on the
Yeah.
right side there, like it wants to go higher, which that will not help house prices and people, they're going to be buying either less house or just deciding to wait.
Yeah, I'm not surprised about this, man. I mean, I think I'm pretty sure if you go back to one of the recent Elevate chats, we said if you want to go lock in a good rate on a house, 6% probably is about as good as it's going to get for a while, and rates are probably going to go back up. So far, that's pretty much what's happened. And I don't know, man. I don't see rates going much below 6% anytime soon. I
No.
see the Fed continuing to hike, and there's no. I mean, if the Fed's going to be last time mortgage rates got just over 7%, the Fed was a good what 75 basis points, maybe 100 basis points lower than where they are today. So if the Fed's going to keep raising, there's no reason that the 30-year mortgage isn't going to go materially higher than 7%.
Hmm.
Um, so yeah, I don't know. I need to buy. I want to buy another property in Colorado so I don't have to spend summers in the heat and humidity of Florida. But I don't know. I don't. It's kind of like I'm stuck, right? Like, do I want to overpay for a house and pay too much for the house, or do I want to get a great price on the house but spend a whole bunch of extra money and interest? Like either way, I'm parting with the money. Either, does the bank get
Hmm.
it or does the seller get it? That's really the only question. And I don't see, and maybe that's why it's probably likely to happen, is I just don't see a material reduction in house prices anywhere on the horizon. Like I don't see a new crisis where people are getting foreclosed on left and right, and there's just a ton of inventory of houses out there to buy where it would cause, too much supply would cause the price of each house to go down, even though rates are going to stay high. Like I don't know. I mean, maybe that is in the cards. Maybe if the government actually makes people start paying their student loans back, they'll begin to, you know, get foreclosed on their homes because they've got to pick one to pay and they pay the student loan. I don't know, man. I don't see house prices coming down enough to make a material difference. I think I'm just kind of it's a matter of whether I pay the seller or pay the banker. And
Right.
that means I just need to make a lot more money somehow. It's easier said than done during that impending recession that I see coming. So I don't know. I
Yep.
guess I'm gonna have to stick it out in the heat of Florida for another year or two, maybe.
Yeah, so I don't know, we'll see, but it's just not a great time to borrow, that's for sure. So, but you know what is good? So I put this up here just for everyone to look at, but short-term yields, 3 months, you're getting 4.84, 12 months, you're getting over 5%. Actually, 6 months, you're getting 5.13%. This is one, if you've got cash and you're looking for like, what do you do? This is a great option. It's not recommending anything here, but if you're a do-it-yourselfer, this is something you should be aware of and go figure out kind of how to buy them. I know treasurydirect.com, is it, Shane?
Yep.
You can get
TreasuryDirect.com.
you can use that, but yeah, it's a nice place to put some cash short term while you wait this storm out. So, and of course that's not normal. We've talked about that. At least now you see the 10 years at 4%, but now that's even worse in my opinion because finally you're seeing the longer term rates start to reflect that, we're not pro growth right now and it's not looking that great.
Yeah.
And yet we're still inverted on the yield curve. So it's not
Yep.
not a not a sunny time in the market, we'll say.
No, it's been great though in these yields. I mean, we're buying tons of those treasuries. 9 months as well is over 5% right now. So we got a lot of clients taking advantage of that. And Yeah, Treasury Direct is a great option. There are also some funds that I've recently learned of that have been created, just ETFs. They're very cheap, that you can actually go buy, and they're gonna liquidate over the course of the next couple of years. So like there's like a 2-year iShares Treasury ETF. I don't know what the symbol is, but at the end of 2 years, it's just gonna liquidate. It's like it's not gonna exist anymore. That ticker is gonna be gone. So they're just buying bonds that mature 2 years from now, or whatever it is. And so it's an interest. I've never heard of a fund like that before that just kind of had a limited shelf life. Usually when you create an ETF, it's designed to like be perpetual, and they're constantly, having treasuries mature and buy new ones of the stated maturity of 2 years or whatever. But these guys are like, it's a little bit different. It's a different wrinkle. I'm pretty sure it was there were three iShares bonds. They were like a 1 year, a 2 year, a 3 year, or maybe a 2 year, a 3 year, and a 5 year. I don't remember exactly, but I recently learned about them and I was like, huh, that's interesting. I'd never heard of that before, where there's like a known kind of end date for when these things are just going to be done and liquidated.
Yeah, it's interesting.
Pretty
So
interesting. Yeah.
yeah, some good options. So go dig a little bit, but short-term treasuries right now do look pretty good for some cash.
Yep.
And then Shane, found this one, but I'd kind of heard some rumors about this, but yeah, pretty interesting story how you can go bankrupt pretty quick.
Yeah, I mean, it's no surprise to me that companies are starting to they're going to go bankrupt. This isn't the only one that it's happened to. And it's not the only one that, will happen probably in the next year. I think there's going to be a wave of this kind of thing happening. And maybe some of that will lead to, a housing price decline that's material enough for me to look at a property in Colorado. But yeah, I mean, these guys went from raising $222 million in bonds, selling bonds in the market, to a day later pulling the offering and folding, just went bankrupt. Said, nope, we're not going to raise that 222 million. We're just going to close our doors and liquidate, let the bondholders liquidate our assets. And so it happens fast. And so at the bottom right, you see the quote there from Ernest Hemingway. It's pretty famous quote, especially in markets. But yeah, how did you go bankrupt? Two ways: gradually, then suddenly. So the writing's been on the wall for this type of a business for a long time. And you can see it coming. You can see it coming. It's like, like if you're looking at a freight train, it's coming from a mile away, and you're like, boy, here comes a train. Uh, it's to me, like I've seen that growing up my whole life. Like, oh, there's a train, a mile away. It's coming. It's going to be here. But when it gets there, it's always like bigger and louder and stronger and meaner than you ever imagine it could be from that far away. And once it shows up, I mean, there's no stopping it. It's just game over. So, yep, that's what it reminds me of. And I don't love to see this happen. I'm not celebrating that there's a bankruptcy and, oh yay, we were right. There's problems in the economy. I don't know. I don't take any joy in that. I wish that the people who manage this business had done a better job so that their employees would still have a job to go to and earn a living and sell some cars. And you know, I I would much prefer that, but this is unfortunately what happens when the Fed keeps interest rates artificially low and at zero and prints money and gives it away to people and lets people think that, nothing bad can ever happen. They get greedy. They take risks they shouldn't take. They take their eye off the ball. They get sloppy, and the result is bankruptcy and a bunch of people lose their jobs. And
Hmm.
I think it's a shame. I mean, you're never going to get rid of that in a capitalist economy. Like I always tell people, like capitalism without bankruptcy is like Christianity without hell. It doesn't make any sense. It just you got to have consequences. That's how God designed the world. I mean, there's good and there's bad, and there just has to be consequences. The I guess the magnitude of those consequences, I think, would be a lot less with less government intervention. That's
Yeah.
that's pretty much what I think. Like stop all the bailouts. Let's not bail out people who took too much student loan on and can't pay that debt back. Let's not bail out big corporations that get greedy and can't pay their debts back. Should let those companies fail. And yes, I realize there's pain with that. But employees should have some responsibility to audit like who they're going to work for. like go figure out like, hey, I'm applying for a job with this company. Do I have confidence in their management to run a business and keep me employed through the next recession? That should be something that you think of. If you're in the market for a job right now, think about who you're taking a job with and how confident you really are in that. I think a lot of people who take salary jobs, they look at it as like, oh, I'm on salary, nothing bad can happen. It's like, well, not so. If the company folds, your salary's gone.
Yeah.
You're done. And it might not feel like there's a lot of risk with it, but just assuming that your job is safe because you're on salary is, it's just not the way it works, unfortunately. So
Yep.
anyway, hate to
And
see it, but this is what's happening.
yeah, and partly too, in a capitalist society is you get creative destruction. So out of this will come some creativity, and I'm sure we'll end up with some, good options down the road of some resilient companies that provide good service. But coming out of a low rate environment, you're bound to see some that just didn't quite have their business models, buttoned up. So, um, but then Shane, this one from Hedgeye again, their cartoonist is just great
Oh
over
yeah.
there.
There's
Always
a
get a good
ton of
laugh.
material. There's a ton of material out there today, though. I mean, my goodness, the cartoons almost write themselves. I can't draw that well, but yeah, the cartoons are like writing themselves. It just trips me out how bullish people are, and it's like, are you even paying attention to what's going on in front of you? It's like these people are all just walking around looking behind them, like, oh, coast is clear. It's like, dude, you're not walking that way. You're walking forward right into the mouth of a bear.
Hmm.
So yeah, this one I thought was funny enough to throw in there.
Nice. And then Babylon Bee article. No opinions on what's going on over in Ukraine, but this is pretty funny. And it's
Yeah,
even funnier. You always think the Treasury has all these gold bars, and hey, maybe they do, but uh, just
maybe
giving
they
them
don't.
keys to the kingdom.
Yeah, maybe they don't have all that gold either. Who knows, right?
Hmm.
But yeah, man, I was thinking like if they had just given every American, just split it evenly. Every American splits evenly the billions and billions of dollars that have been sent to Ukraine. Wouldn't how would that not be better? Like I don't understand how that wouldn't be better.
Yeah.
Like I can't wrap my mind around it. Like I don't really think that any country should be invaded and taken over and so on, including Afghanistan and Iraq for that matter. Um, you know, so it's not like again, it's not like I want to see Ukraine get taken over by Russia and become communist and all these other things. Like I'm not advocating for that. But like, I mean, the chances of it happening anyway are still reasonably high. And then what will we have spent all that money for? I mean, we spent lots of money on tanks and weapons and all that stuff in Afghanistan and left like billions of dollars worth of material there for the Taliban to take over. Are we doing the same thing for Russia? Are they going to get all of our drones and all of whatever stuff we leave over there? I don't know. It's so far away. And Ukraine's such a little tiny part of the world so far away from us. I just question why we're spending that much money. Like I don't know. I'm missing some part of the story. I don't
Yeah.
get it. Again, I'm trying to stay apolitical on it because I hate all politicians equally and for different reasons. So I'm not a political guy. Um, but as a capitalist, I'm like, dude, we could we could do a lot better with that money, I think, than send it to another country. I don't
Yeah.
know. Seems silly to me.
Yeah. And it's certainly, above my pay grade to be a global, macro guy that knows how all the wars work and who you support and who you don't. But yeah, a lot of money
I,
to be sent over there
I do know eggs are
for good
expensive, and
cause.
there's a whole bunch of people in the United States of America that could use some help buying those eggs and feeding their children. I
Yep.
do know that. So it's like it's hard to see that much money getting sent overseas when so many people in our country are having such a hard time putting food on the table for their family. Like I'm just like, what in the world? What gives?
Yep.
So
Agreed. So
anyway, well, we
perfect.
had a
Well,
pretty we had a pretty tame call today. I'm a little tired. I was up late last night playing a hockey game and staying busy trying to keep up with all the workload here at Elevate with we're short staffed and we got one of our operations people out actually in Iceland this week and next week. So we're slammed. So thanks for hanging out with us for a little bit and we'll try and bring the energy back next week.
sounds good. Well, thanks, Shane. I'll see you next week.
All right, man. Later, Kyle.
See ya.